As you know, we don't, it's a membership driven. We've never done any advertising. We're not really involved in TikTok or Facebook or any of those other things. We let people talk about us, and word of mouth is how you build a business.
You add up the wage inflation and some of the other costs like utilities that are going up, that's a $100 million headwind for our business. And so, we're going to do a little bit of pricing. We're going to try to drive what we call mix, so get more premium items in the basket.
We started our journey as a toy company, as a toy manufacturing company. We evolved to be an IP company that manages franchises. And the biggest change in how we approach our business is to realize that people who buy our products are not just consumers, they are fans.
Even though consumers are looking for value, that doesn't only mean price. It means convenience, it means great taste, it means nutrition. It really means something your family's going to eat.
Welcome to our Access Day, where we have about 35 panels over 2 days. And we're going to kick it off first with our cannabis panel. So we have MSOs, operators throughout the country. They're all private. They're going to give us an update on their trends and how they're thinking about the cannabis market. We're going to kick it off first with Tim Seymour, who runs a major active ETF in the cannabis sector, and he's also a regular on CNBC's Fast Money. Let me hand it over to you, Tim.
Great. Look, exciting times in the cannabis space because the news flow over the last week around safer banking, getting through the Senate Banking Committee is not only a tremendous symbolic win. You had 3 Republicans support the bill. What happens on the floor and obviously what happens in the House are major issues. But clearly, the dynamics with Schumer and co. certainly very supportive of the bill. And I think the scheduling of the vote is kind of the next key catalyst, I think, for where the market and revaluation, or at least continued re-rating, are things that people are looking at. In terms of the rescheduling, there's a lot of different views on the timeline here. Frankly, I don't think we know the timeline. But there's no question that there's been enough feedback that whether you're listening to some of the feedback coming from the Congressional Research Service, which is opined that the DEA was largely to side with HHS, and that the next steps would be for the DEA to initiate a rulemaking procedure along, with its own scheduling recommendations. You could do this 30 to 60 days. There's a lot of questions about whether you need a public hearing. So I still think that the rescheduling dynamics are open. And even though arguably they are more important to the re-rating of the sector and obviously the free cash flow from operations, there's no question that if you look at the industry and if you look at the free cash flow dynamics, what the difference means. I'll let some of the operators are obviously going to talk about what that could mean for them. And I know it's already been discussed. In terms of what the market has done, though, it's clear that the market really has not seen any new additional capital. It's clear that the dynamics around the custody and the plumbing and the ability to actually own and trade this market are still very significant impediments to getting more investment in. I do think you had a chance to look at where cannabis, call them the larger multi-state operators, should trade relative to CPG peers. And I still think that the industry, which is excited about 8 times EV/EBITDA levels, if you look at times 24, at least expectations, it's yes, very cheap relative to the peak of the industry. But I still think one of the issues for a lot of investors and folks that really look across many consumer sectors is they still don't know what the margin profile of the industry is supposed to be. No question, the next 6 to 12 months seem like there are both catalysts and that we're seeing some relief for some of the bigger operators. Curaleaf listing in Toronto is an example of where the companies are doing everything they can to position themselves for a world where they might be trading on the bigger exchanges in New York and NASDAQ, but that they are, I think, moments that give some investors an opportunity to look at like where we may be. the price action has been exciting and disappointing all at the same time in the last 6 weeks. And again, I think that's a function of you really have the same fishbowl investing in cannabis today.
Thanks, Tim. Let's move it over to our MSO operators. So there's two questions. First, just rate your optimism today versus 2 months ago, 0 to 10, 0 being the worst, 10 being the best. And if it's changed versus 2 months ago, why? And second, if you can just talk about your trends in the third quarter over the last week or two versus the second quarter trend, just looking, are things getting better, worse, staying the same? Any change in inventory pricing by the publicly traded companies would also be very helpful. Let's start off with Mr. Global, who also has operations in the western part of the United States.
Europe looking a little bit more positive here. It was positive the last time we talked, but the big news that just came out from Germany was that they will take the narcotics listing off. That was announced a few months ago before the United States made that announcement, or the HHS letter. But the important thing was that last week, it doesn't have to go to a political vote with the upper houses now. So it's just an administrative pass. Of course, there'll be some jockeying, for some rules. They're more looking at how to protect kids from not getting marijuana and things like that. But at the end of the day, it looks pretty imminent that there'll be a delisting. And that's ignited the conversation across the board in all the European countries as to the narcotics listing. So we already have now 15 of the countries where their health ministers are looking to adopt similar rules towards medicinal cannabis. And with the European market, it looks like it'll go over 1 billion with the population well over 400 million. I think Europe, now for the first time, we're being more aggressive at our capital expenditures when we were really pulling our belt in there for a while to see how it develops. And the reality is what you're seeing in countries like Australia and Germany, the actual preference of consumption looks a lot more like a recreational market to the degree of about 70% of the people are coming in there and saying, I saw this on the web. I want to try this kind of a flower. I want an edible. I don't want these typical products. I want the things that the Americans have, that the Canadians have, and the doctors are asking for that also. So I think what you're going to see is something really great, at least up through the year and into 2024.
Thanks, Mr. Global. Let's hear from Mr. West.
So I think the last time we talked, my optimism was around about a 4.5. I know I was on the lower end of the scale collectively. I'd say I'd put it at about a 6 right now. Certainly the HHS comment as well as the Senate Finance Committee are both positives, right? Because they're steps in the right direction. Coming from a California perspective, I know a lot of people look at Colorado as like the first state to have had some sort of legalization, but California had Prop 215 going all the way back to 96. And I use that as a point of reference because there was a time period when everybody was very excited about Prop 64 coming online. And as a result, you look at these changes and what's expected, is it a reschedule to 3 versus a descheduling? It's hard to know exactly how that's going to play out. Look at what Schedule 3 drugs are today. Testosterone, steroids, ketamine, not easily accessible things, right? And so it's hard to know exactly how that plays out. And the reason why I gave you the reference on 215 and 64 is because if you asked most operators today in California if they could go back to the ways of operating under the 215 proposition, the answer is unanimous. Yes, they would. So it's the old, be cautious about what you wish for because it's hard to know exactly how it's going to play out. Still, nonetheless, I think optimism is at a 6. I'd say that's probably a general consensus across the board. That said, Q3 over Q2 ended up being low double digits down. Most of that impacted by the increased cost of petroleum. California right now, Generally, a gallon of gas for the last quarter has been over $6. It's high, one of the highest, if not the highest, in the nation. That affects people's budgets. It affects their ability to consume everything. The larger chains right now are still dealing with this verticalized model. There are a lot of them trying to get as much margin as they possibly can, and they're doing that by offering internal brands, not name brands, just their brands. And as a result, shoppers, I think, are getting somewhat fatigued as they're looking for things that they consider to be actual brands, and they're not finding it. So the larger chains have lower inventory, less availability, and in general, and less name brands available, period, across the board. They're losing market share right now. And the ones who are gaining are some of the mom and pop stores that are still good operators that do know how to run their business. And as a result, they're keeping their products in stock. They do have those brands. They're getting more shopped across the board.
Thanks, Mr. West. Let's hear from Mr. Multi-State, who operates in several states across the country.
Hi, and just for reference, I'm speaking with respect to the four geographies we cover, which is Illinois, Michigan, Arizona, and Ohio. So a lot of Midwest coverage and a little bit of Arizona. Optimism 2 months ago was an 8 out of 10. I'm right there today, even with the news about potential descheduling, and potentially some form of legislation. I don't expect that to materially affect what we do here in the coming year. I think it's going to take time for that to evolve and have any sort of meaningful impact on what's happening in our space. The trends that we're seeing, everything's stable. I think in general, and this is largely a reiteration of what I've said in the past, is the cannabis consumer and even new participants, they want more cannabis for less money. And that's been reflected in discounting and bulk offerings in terms of form factor and packaging and so on and so forth, which is, I think, just more of a convergence of vice behavior in other categories kind of seeping into cannabis. Sales trends have roughly been the same. Retail inventory, again, it's largely stable in these categories. There are some nuanced changes between the geographies. However, not worth getting into too many of those details, but you are still seeing that further convergence between the open markets, which have more competitive and aggressive pricing, in the limited markets, finding a balance, and that lane is narrowing. And I think that'll continue to happen until, there always will be regional differences, but by and large, you're going to see a normalization of pricing in the coming years between what a consumer buys an eighth for, what do they buy a pre-roll for, so on and so forth. Otherwise, I think largely it's a continuation of what's happening. I think there's going to be more consolidation. Successful operators are the ones that can get razor focused and get deep instead of wide in their geographies and the businesses that they're doing. And we're just going to continue to see that. It'll be slow for, the less operators that aren't capitalized well will eventually fail. It's just that just tends to be a slow process in our industry. Otherwise, it's very similar to last quarter, and I see this continuing into the next quarter as well as into early 2024 as well.
Thanks, Mr. Multi-State. Let's hear from Mr. Northeast.
What I'm seeing is kind of leveling out in both the states I operate, Maine and Michigan. Wholesale pricing has kind of leveled out, and we're actually seeing an uptick in a couple of the areas. Prepackaged eighths are one of the areas we didn't really jump into. A lot of it was bulk at first, but the prepackaged eighth market for us is upticking pretty nicely in the retail, or at least I should say from the cultivation into retail kind of dynamic of the flow of cannabis. So my optimism for both states is very strong, and I think it's only because we're making a lot more money and selling through everything. I would think maybe 2 months ago, somewhat similar, maybe not as prepackaged or smaller SKU dependent, but usually when you break it down like that is where you see the uptick in kind of the financials. So didn't really see that. We were happy at a kind of a wholesale number for some of the larger income pieces for the company for both Maine and Michigan. So everything in the pre-pack form has been a really nice surprise, and we were able to move into that very quickly with some of our outsourcing partners we have in both states. From our extraction side of the world, we're seeing a ton of solventless hash rosins, bubble hashes. Those are kind of the cleaner, safer, better ways to be kind of consuming cannabis. Edibles are still on a small uptick, just a lot of kind of dumping raw material to those guys. But again, it's all starting to work. Just really happy versus going the other way. So all things positive in cannabis for Maine and Michigan.
Thanks, Mr. Northeast. Let's hand it over to Mr. Mountain.
Yeah. Hi. So I put my optimism at a 6. I think when we met maybe a month ago, it was at a 6. A few months before that, it was probably at a 4. I'd say my optimism being at a 6 is primarily related to the following factors. One, I feel like the market where we operate that has had, great fluctuation down over the last 18 to 24 months has definitely stabilized and has hit a bottom. I can't say it's come up a ton from that bottom with regards to looking at, wholesale flower prices as well as, retail 1/8 quarter ounce pricing in our state. I think that's been fairly consistent. It's risen a little bit in this summer. It is October. I'm curious to see what happens over the next 3 months with pricing. It could get depressed some just from the seasonal winters that we have here and the price fluctuations that kind of naturally occur across the year. I think that bottom, though, has given me a lot of hope that there's really only one way to go, and that's up. And we've seen just a tiny bit of that, even though there's still a lot of consistency in pricing. I'm also optimistic about investor money coming back into the space due to some of the regulatory changes when we talk about descheduling and banking, mainly the descheduling. I do think that drives consolidation and makes asset prices more valuable, and probably more, specific assets more valuable than other assets. I think store assets, because of the potential removing of 280E, have still a lot of value and a lot of ways to go up. And when you think of like larger operations that are store focused, that are focused on retail and retail only, I think those guys are going to get hungrier and acquire it at higher valuations. Definitely the store assets and the retail assets. Still hoping to see, pricing changes in our market increase. That would get me to a much higher optimism level, a 7 or an 8. But right now it's pretty consistent. We've hit a bottom. I'm optimistic definitely about the regulatory changes that they're discussing, and that I hope they move on.
That was really helpful, Mr. Mountain. Let's hear from Mr. Canada.
Hi there. So last time I think my optimism was at a 9. I'm going to downgrade that a little bit to an 8. And I think that's really driven primarily by macro factors. We're about at least 2 years away from an election here in Canada, and there's a high level of inflation, and we're seeing consumer spend continue to sort of creep down. Consumers under a lot of pressure. Previously, I thought we were sort of at the bottom and bottoming out, a little bit like Mr. Mountain was talking about. But our outlook now is that I think it's probably going to get worse before it gets better, and we're 1.5 to 2 years before things sort of start to swing back up on the upswing. So I don't think it's going to get a lot worse. So I'm still giving it an 8 overall, but I think we're going to see a little more downward pressure on consumer spend in the next year. The silver lining of that is that, as I've mentioned before, we're coming up in the next 1.5 to 2 years on the 5-year anniversary of when they opened things up and all the influx of retailers jumped into the market. So as 5-year leases come up, it's one thing to slug through in a sort of tough market. It's another thing to re-sign a new lease. So there's continues to be store closures, but I think they'll really accelerate at the end of that 5-year lease cycle, which is about 1.5 to 2 years away for most stores. Even though we're at the 5-year anniversary of legalization now, we had that in Canada. We had that little lag before it started.
Okay, that wraps up our cannabis panel. Thanks to all our speakers. Up next, we have our food buyer panel, where Catherine will talk to food buyers across the restaurant in all different categories.